Big picture analysis, US dollar versus gold, setups in the making. So the dollar fooled me a bit recently as it looked like it was turning weak and gave me doubts about my upside projection for the early part of this year, which was over 98, and there it came this week as we got a lot of strength coming in. It's based on the U.S. being maybe the best of all evils as world economies slow down, and they see that maybe the U.S. Is the place that may be the most resistant to the slowdown that we see, and that's certainly would not be based on central banks, because every single one of the central banks is doing everything they can to keep their economies from slipping deeper down. Especially if you look at our Fed, who backed off really quickly and really sharply from the double drain they had going on, which was raising interest rates and reducing the balance sheet. So the U.S. dollar strength just seems like the rest of the world thinks it's a safer place to be. And as per our expectation during this near-term period, gold has been weak, and we often see that happen as there tends to be an inverse correlation between the dollar and gold. It's not a perfectly inverse correlation. There are times when that's sometimes off, but the norm is that when there are big moves in the dollar in one direction or the other, gold is usually going the other way. It's pretty simple. When the dollar breaks very strongly to the downside, well, it takes more dollars to buy gold, so gold is more expensive. And that's why we have, especially in big moves, that inverse correlation. I'll show you that. It's sometimes off, but mostly it's really a good correlation. And what we have right now in the shorter term, as we look at probably the next month, approximately, is where there's a likelihood that there's a top coming in the dollar market and a bottom coming in the gold market. I'm going to review those for you as we look at the charts that we normally do, and then I'm going to look at some different charts that I think are going to be very interesting. So we'll look at the weekly charts that I show you in gold and the dollar in the intermediate term. And then we're going to look at a long-term version of the weekly charts, and I'm going to break those down into remarkably good cycle patterns and giving you the longer-term projections on the dollar. And then we're going to compare that to gold, and we're going to look at setups that I think are coming now. And this isn't like a short-term scalper type setup. This is a longer swing trades, and even for investors to be considering what we're going to look at right here. You can't fine tune when these type of setups are going to happen, because we're really looking at much longer term charts, and you could be weeks and weeks off before these things set up perfectly. So we're going to look at that, and then we're going to look at the weekly dollar chart that I think is going to be just absolutely fascinating as we look at that and break down some harmonic families, and this will be like a lesson in cycles when we look at this. So I just want to make sure that you have a focus on that, and if you have not watched the cycle analysis workshop, we're going to be essentially discussing is the principle of harmonicity, where cycles line up in groups of smaller and smaller cycles. Often they don't perfectly line up, and you get a lot of wiggles in the market, and sometimes they line up just remarkably good, and that's what I'm going to show you right now. So we're going to start out again by looking at just the charts that I show you on a regular basis in the dollar and the gold markets. And then I'm going to point out some specific time frames that I think are important as we get into the longer term chart. So here is the dollar chart that I show you on a regular basis, and looks pretty busy. I'll help you see what's on here. The cycles that we're looking at here are much smaller cycles than the ones we're going to look at on the longer term chart. Even though these look pretty big, maybe this big one does show up. And a key area we're going to be looking at and noticing is this rally right in here, and then what looks like a topping period and a decline, which extends all the way out here into the late summer or fall. And you can see that what our projection looks like here is that this cycle will peak and then decline, and then you'll get a rally and then a sharper decline out into the late summer and fall. Let me zoom in on that a bit so that you can see. Essentially what we had here was our high that we had projected up into this fib extension zone over 98, and you could see that this week just barely got up into that area. And then we're looking for this to peak and then come down. So somewhere in here is likely a peak and then a break. And then you probably get another rally. Now I have this pretty shallow in here, as you could see, and it could be sharper and even get back up into that area there before it then turns down. This period over here in late June through the fall is a period of high risk, and that's a period we're going to focus on when we look at the longer term chart. So the high risk period, let's keep that on our mind. July, August, September, those look like periods where there could be a lot of decline in the dollar market, while it makes maybe a more compound top period in here. But right now, it looks like it's at a spot where for the near term, a peak is likely. So again, we're looking at gold as an inverse to the dollar, and here's the gold pattern in here. And while we are looking for this peak to come in this dollar market, we're also looking for this low to come right in here in the gold market. And then a period of rally. Remember I told you July, August, September as a potential. Well, we have this rallying up into here into August right now. It could certainly go further than that. And it's likely going to test resistance zone up there. But you got to get through this period in here where the dollar is very strong and we believe peaking, and we think where the gold market will then make its bottom in this area also. And just repeating what we said yesterday, supports at about 1266 and 1246 right in that area. We think that that's the intermediate support zone that is a buy area, and you could see it tried to get down there. You could see this 34-week moving average coming up and curling right over there, so that's a pretty important area also. So I wanted to make those really clear to you as we look at these really pretty short-term patterns in here over the next week or so, next month or so, where we look at the dollar peaking, coming down, the gold market bottoming, starting to go up, and then this all looking like a rally into late summer or into the fall for the gold market, and potential for the inverse of that, the dollar falling. Now, we're going to look at longer term charts, and we're going to do some cycle analysis in here so that you can get a good feel for what we're looking at overall. And I think you're going to find this fascinating as I bring in these cycle charts of the dollar. And I'm gonna bring these charts in of the dollar. Let me get this lined up properly. Sorry for my side of my head. And then I'm going to bring in the chart of the dollar versus gold, and we'll make some comparisons in here. So this is a really fascinating chart when I bring this in, and you can see in here a extremely consistent cycle pattern as we look at that. This cycle pattern that we're looking at, let me just point out to you what we have in here, and that is harmonic families. So each one of these is a harmonic family, and that is broken down into here into the smallest cycle, which is 21 weeks, that little one. The next one, which is double that, which is 42 weeks. The next one is 84, and the next one is 168. Now, if you were to be a student of cycle analysis, you would understand that there is the principle of nominality, which uses very rigid cycles, uses 40-80. I mean, this is close to what those are, and I believe it's only coincidence that you have those matching. If you have watched the principle of nominality video that I did also. So when you look at this, you can see a lot of clarity. So if you look at the big cycle, you can see the bottom here and here and here. They're an average of about 168 weeks apart. Now note this low over here and then the shift. So I note the shift right in here that this one came late. The dollar was very weak, and you learn that when cycles are very weak, the declining phases, they can run long because the sellers they keep coming. Just as rallies can run long because the buyers keep coming in rising phases. So we have a similar situation to that right now in this rising phase where the buyers have pretty much come late into the cycle. Now, I did not put a shifted harmonic family in here, just under the assumption that this is shifted over by probably about 12 weeks or so. Then this low right over here is shifted over also. So I'm not putting those in because I don't want to confuse the charts, but you get a sense that because of that, we expect these lows to be a little later than where they show up on these charts. That's just a little bit of a lesson in there. So if I were to break these down, you could see this big cycle is very clear right over here. Now look at the harmonic half, and you could see the midpoint right there, the lows. You see it right over here and right over here. You can see that right over here, just a few weeks off. Right over here, just a few weeks off. And then remember, this is shifted, so that's going to be a little bit further to the right over here. But you can see in here the declining phase. Now, note the yellow. Why did I put yellow in there? Because I want to highlight the fact that we are in the final stage, the corrective stage, or entering the corrective stage of the first harmonic half. That's that yellow area there. And that's 1, 2, 3 cycles that are pushing down there against this upward trend that comes from the bigger cycle. That usually gives you a decline that holds above the first sell-off. You can see that right in there. When you get the next rally, if it doesn't go very far and then turns down and breaks down, well, it's got a lot of problems, and you can see what happened. This one went through this corrective period here in the declining phase of the first minor half and then had a really strong rally. This one declined through that declining phase of the first minor half and had a pretty strong rally. The same thing here, a big decline and a very strong rally. So some of them are, moderate rallies. Some of those are total failures like you had over here. And we're, of course, giving this one the likelihood of more of a failure, but that could be wrong. It could get up here and equal the highs out over here in the next year. But in the meantime, the important thing, and let's just look at these 2 last cycles right in here so you can get clarity on what this looks like. This says here, this is your corrective phase right here. This was a big decline in the dollar that you can see. That's these right over here that were coming down. And if you can see that there is a minor quarter and a minor eighth. So here's your first minor quarter bottoms here. The second one bottoms with the half. The third one bottoms right over here. See that? And then it rallies, doesn't go far, breaks down, and then declines through all of them, making this big downside move. So where we are right now is here. In other words, the peaking area of the first minor half, right? So that is significant, and I'm going to blow this out again so that you can see each one of these in the went a little too far there. Each one of these in the declining phase of the first minor half had significant declines in the dollar. Here, 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 here. Those are all the exact same part on this perfect geometry in this, and then this phase right over here suggests there will be a dollar decline. Now that dollar decline in every one of these cases held above the major lows. So this one way up here, this one way up over there, this one got close, you see that? But overall, not really much of a breakdown there. So we're just entering into this phase of decline right in here. So what that projects to is a projected decline. If you see this big break coming in here and then another rally coming into the next year and then another big break, that declines into the Q1 of 2021. So we're projecting a low, a break here into the fall of 2019, a rally into 2020, and then a massive decline into 2021. Right there. This is the period right over here from the fall of this year, from the spring approximately of 2020 into the end of the year of 2020 into early 2021 is a period of projected large decline in the dollar and likely a big advance in the gold market. So the very best time for gold, based on what we see here, is likely to be, well, not starting until sometime in 2020, though we're entering into a window of time for gold right over here. And again, if we're making this long-term projection that the big decline in the dollar is from somewhere mid-2020 into early 2021, you can see every one of these gave you massive declines as we look at these 14 years right over here, and a previous four major cycle patterns, each of them brought massive declines in the market. The decline that broke right in here was the beginning of the great experiment for the Fed, and this right over here, of course, is where the stock market made its bottom, and then as the likelihood of increased interest rates would come, the dollar rallied. Of course, the increase in interest rates never came. And then the dollar had a really good time of it based on the rest of the world, well, having a lot of problems also. So this is a really nice picture of the major harmonic families in the dollar, which to me have a lot of clarity as I just explained them to you. So now what I want to do is I want to compare that chart, and I'm going to bring in another chart with some comparisons to the gold market. And I tell you, when you look at this, don't ever let anybody tell you that we don't have the prettiest charts, because this is clearly artistic when you look at this. So again, we're looking at the same chart that we looked at before, but we're putting in gold and looking at this inverse correlation to gold and what happens during those big declining phases that we just pointed out. One of them, which really looks to start just in a few weeks, and then of course that really big decline that's likely in the dollar starting in mid-2020. So here is that chart, and again we're looking at the comparison to the gold market, and we use GLD because it's more consistent and has more data on it than if we use the futures. So we're using the GLD market. So let's look right over here. If we go way back over here, so this is that first area that we talked about, where this decline right over here is the end of the first minor half. If you look from the point where the peak came in the dollar right over there to the low right over here, that's what we measured what happened in gold. So that would be this low in gold right there to the peak in gold right over here. And while this break came, that was a 27% increase in the price in gold. So you can see that the inverse correlation held up there very well. Now, we'll come back and compare the bigger declines in the dollar market in a moment. Here you had quite a large decline in the dollar market right there. And during that period, if you measure it from this point right here in gold to the low right over here, the peak in the gold market at that point where the dollar made its bottom, gold rallied 35% during that window of time. Pretty significant. During this one, the dollar had a big decline, just as it was supposed to, coming into this minor half bottom. Gold rallied a measly 13%. So if you look at it in terms of today's gold, well, that would be some $150 rally in the gold market over these next coming months that we're looking at into the fall. So that's the third one that we're looking at. This one right over here, you could see we measured gold from the point where the dollar made its peak and gold made its bottom right here to the point where the dollar made its bottom and gold made its peak, and gold rallied 27% again during that time period. So you can see pretty consistent there. Each one of these minor halves right in here brought significant declines in the dollar. Each one of those brought the corresponding rally in the gold market. And here we are again right over here. So again, we have a projected decline into for the dollar into Q1 of 2021. That's the bigger picture. For the intermediate right in here and the dollar peak that we're looking at a likely increase in the gold market into the fall of, that should say 2019. That's incorrect, so I have to fix that because it annoys me. This would be 2019. The rally into fall of 2019 is projected to be between 15 and 25%. You can see where I get that from just looking at some averages in here. I don't expect it to be as low as 13%. That would be unusual. I don't expect it to be as high as this 35% here, which saw that really huge decline in the dollar. The only way you can get a decline like that in the dollar would be as if the United States went into recession where there was a massive decline in interest rates. So it's probably more moderate. Let's just say 15%, which is 180 points in the gold market, $180 on the upside during this window of time right over here, which is likely to be sometime into, we'll call it, late August to sometime in early October. Pretty big window of time in there, but you can see that's what we're looking at. So again, the bigger picture, if you look way out, you can see what happens here during these final huge declines right in here. Well, generally what happens is gold soars on the upside. Now, I want you to note right in here, that did not happen on this one. You got an uptick in gold. Gold rallied from 1160 up to about 1335. It was still a 170-point rally in the gold market, but it wasn't any kind of huge runaway in this period right over here, and the same thing happened right over here. So gold tending to be less responsive, though you did have a rally in here in the gold market from this low point right there, which was 1070 approximately, up to the high point over here, which was 1280. So a $200 rally there in the gold market. So there are periods where you have much bigger upside moves in gold when you have big breaks. That certainly could be the time period out over here into the first quarter of 2021. 200-point rally minimum would be, and it could be much, much more than that. But that's this period over here, 2020, middle of 2020 out to the beginning of 2021. Our focus now for these setups that we're looking at are the mid-cycle lows right there and the dollar acceleration to the downside that's likely to occur right over here, where you're likely to see a 15% plus rally in the gold market. You can see the perfect harmonicity when we look at that. You can see the consistency in the inverse correlations, and I think that was not only an extremely interesting picture, but one that tells a story of a fairly good setup coming up for a break in the dollar and a rally in the gold market. Of course, that would be good for silver also, which tends to move with a higher beta. In other words, it will make a larger percentage gain. Now, silver is an interesting story in that there's been an imbalance between the supply and demand in favor of silver for about 6 years now, or 7 years, where there are just not enough being produced. Silver has not greatly benefited from that yet. And that might be happening during one of these periods that we're discussing in here. So we're in the final stage of this upside move for the dollar. It's still could have a little bit of time more to go, but when it's over, it's likely to fall pretty sharply. We're in the final stage of this decline in the gold market, which has a very strong inverse correlation, especially during periods where there are large moves in the dollar inversely. And so we expect that there'll be a rally starting in the gold market in coming weeks, and that would likely be at least 15% based on what we saw here, and that goes up into sometime August through October, and probably September or October. The really huge fireworks probably are not until 2020, based on what we see in here on these big patterns. But right now we're still in a time period where we could, this is potentially very, very good setup, especially when you consider the potential for the fact that gold stocks tend to rally much stronger, because when you get a big move in gold, there's a leverage situation in their earnings. And you get, if you get a 15% move in gold, you could easily get 30% plus moves in gold stocks. So that's interesting, because the GDX index looks like it bottoms a little earlier than the gold market, and you could be getting some buyers coming in there. We're getting some pretty good capitulation in Pan America Silver, PAAS. That might be one that has a good upside move, because that gets good leverage when you look at that. So I don't want to give too many stocks right in here. We'll look at those again, the gold stocks, when we have and we just did a video on the mining stocks. So if you want to go back and look at that, you can see how these correlates. And then we'll probably do an update in there in the next month or two based on what we see in this gold market. So there you go. A lot of clarity in those patterns. You probably learned a lot about cycle analysis when you look at that. And I hope so. And I hope that it gives you market awareness. Because I say that, when you look at cycle charts, you'll never when you learn them, you'll never look at charts the same way as you did before, and I hope that's that's something that you've become aware of. So that's it for the big picture of the dollar versus gold market, and I'd love to hear from you. Let me know what you thought of it, and I'll see you in the next segment.